623-1010.
Markets. Jameel Ahmad is Vice President of Corporate Development, Market Research at FXTM. On the way to London, we caught you, unsurprisingly, Jameel, flying again.
Definitely unsurprisingly, and yes, you have called me just as I'm about to go to the airport, but it's always a pleasure to speak to you guys and discuss the markets.
Well, bring us up to speed. What are you looking at today? What's been happening?
Sure. Basically, it's a little bit quieter with the local markets. This could be because the U.S. markets were closed yesterday for a U.S. public holiday. But speaking of the dollar, and this is relevant as well to the dirham, the dollar has been widely sold over the past couple of days following a U.S. jobs report, once again making investors reconsider whether the Federal Reserve will really raise interest rates over the coming month or even before the end of 2016 as it currently stands. Basically, the U.S. jobs report from Friday didn't quite raise the confidence that the U.S. Federal Reserve will be raising interest rates, and as a result, the dollar has been sold slightly, and we're probably going to see a little bit of a slip in the dirham. Internationally speaking, we're focusing on not just the U.S. Federal Reserve, but the G20 summit in China, which successfully concluded overnight. Basically, it seems to be that China's taken much more of a dominance and a very proactive, I would say, approach towards the global economy. Premier Li was very explicit in stating that world leaders should be acting more collaboratively together to support global growth. Basically, it looks like governments are now going to be under more pressure to do more, whether through fiscal stimulus or something else, because the general conception is that these global central banks have reached a limit on how far they can actually go when it comes to supporting growth through monetary policy. If you look at most of the developed economies, for instance, interest rates are pretty much near zero, and in some places they're in negative territory, so the pressure is going to now come onto the governments. There was a deal an announcement between Saudi Arabia and Russia that they've reached some sort of agreement to support the price of oil or the oil markets moving forward, but yet there was no suspicions as of now this would lead to a production cut or production freeze, so any rebound in the price of oil was quickly retraced. Elsewhere, UK still looking at the Brexit. Economic data from the UK throughout the month of July and actually August, as we're heading into September, has been much more positive than we expected, and it appears to be that the EU referendum outcome isn't quite yet having the immediate negative impact on the UK economy as that was feared. As a result, we've got a stronger pound across the board. British pound is regaining some of its momentum against currency partners, but still dramatically lower when you consider it where it was before the EU referendum vote. We've got a weaker euro, weaker dollar, a generally stronger Japanese yen. What we're looking out for more moving forward is what exactly happens to the dollar and whether the US Federal Reserve will raise interest rates.
Jameel Ahmad, Vice President, Corporate Development, Market Research at FXTM. Safe journey. We'll talk to you soon.
Thank you very much.